Welcome, SMF Street traders. Once again, it's time to make a huge move. We're going to be looking at the S&P 500 contracts, which I have right here. We're going to be looking at calls and puts. The expiration and the strike prices, 1110, 1110, up and out of the money, 1120 call versus 1120 put in the money. We'll also be taking a look at, and these are October expiration. Earnings start in October, SMF Street seniors. And the thing about it is, if you want to take that wonderful trip to Hawaii in December for your Christmas, well, it's going to cost you at least 50, 60 grand to enjoy yourself fully. So let's get down and let's get busy. One of the things that we're going to be doing is that I'm going to show the imbalances. Here's the 1110 call, and I did the weekly and the monthly charts on the S&P. Now, based on the futures trade, gap up, they gap the 1110 call down lower, and then they would pop this up. This can get a little bit more inflated to the upside, but not too much, because the closing price was 32.90. So there is about 8 handles that you can go up. And on the flip side of that, SMF seniors, is that you gap down. So you got 23.5 here, and I will give you the exact pricing off of this video like we always do. But we'll talk about that, and we'll talk about the based on the futures in the morning and pre-market, where they inflate the premium to sell short, the market maker, and deflate the premium in the same market maker going long. For some of the new people in the SMF Street School that are trading live every day, you'd be looking at the SSO and the SDS, which are both ETFs, bear and bull. So basically, what we're going to be doing is we've already got these moves off of the low. So let's take a look here. Back here, we got deflated on the S&P, and the low on the calls were $11, and they ran over $20 a contract. Well, you've got 30 contracts, you just made $20. That's a $60,000 trade. Just that simple on 30 contracts. Had you only had 10, being a junior in the school, you still made 20 grand. And we had a lot of people who did. On the flip side, when we were buying over here, again, this contract was very deflated on 8-9. And we have all the live videos in these trades that we did. And just vice versa, the low here when we were buying on that contract, the low was $33, and we topped out. Let's take a look and see where we topped out. This last top up there was right around $74. What a move. If you had 30 contracts, well, you might be out buying one of them cheap foreclosure houses on that trade, because that's the bottom line here. Remember, talk is cheap. Show me the money and the reasons why I get paid. So basically, back to what we do best, as adjusting the risk management controls between inflated and deflated, and these are S&P index options. Another thing we're going to be monitoring, SMF Street traders, is up and out of the money. The 1120 call is up and out of the money. We closed on the S&P at 1109.55, up 5.37 on Friday's close. And SMF Street, we're going into the best week of every month, options expiration. So for the front line month, which is still the front line month until the September expires this coming Friday, is that we'll be in the inline month in October, and the balancing act in the S&P 500 index options, which I would say about 90% of the people don't know how to trade it, not because they're scared of it, it's just because they don't know. And one of the things about it, since you've been in the school here, folks, is you know. So these are the strike prices. I'm going to give out the prices. We're going up to top out in the inflated area, and we're going to get down to the extreme deflated area. Another thing I'm going to take a look at during the expiration is an intraday trade on the 9/18 expiration puts, and I will go with those with you after the close of this video. Basically, that's this 11/10 put option right here. And basically, let's take a look at these contracts. Let's make sure we have the right strike price there. It's a September S&P contract. Let me get those up there for you. Here it is. That's the 11/10. Let's make sure it's the right strike price, because we have, that's a 9/30 strike, which is not the contract we're going to trade. SMF Street Traders, this is the contracts that we were trading over here, and they went up to $70 some, and they're down here at 960. Now, on Wednesday is when you want to be out. If we do an intraday on Monday, Tuesday, and Wednesday, they're going to close out on a Thursday. They don't go all the way to the expiration. And they're very, 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 very deflated. And the thing about it is, the old saying is, the cheaper they get during that options expiration week, the bigger the move that they're going to take. We'll keep our eyes on that one. I'm going to conclude the S&P tape, and then I'm going to give pricing off of the video, naturally. And for the seniors, I'll be sending you out emails on the prices.